Good afternoon, everybody. Welcome to the Moving Markets Podcast. It is Wednesday, October 15th, 2025. Right now, as I'm recording this, there is a little less, just under an hour and a half left of trading today. And I got to tell you, it is anyone's guess right now where our indexes and even a lot of individual stocks, like where might they finish? This is we've had a wild day. This is the second out of third or third out of fourth day that we have had some really big swings. In fact, let me take you right here. I want to just show you the Dow Jones Industrial Average right here, and look at the range of trading. Now, I know when you're watching the video of this, it may be a little bit hard to get an appreciation of this, but if you look at the top and the bottom of three of these last 4 days, even today, not quite as big as yesterday, not quite as big as Friday, but look at the top and bottom of those and compare them to the top and the bottom of each of these days here. And how this was, we had 4, 5, 6 days in a row of steady upward movement, had the same thing here, had, some good upward run here and here. And the range of that movement was nothing like the range, meaning the highest point we hit during the day and the lowest point we hit during the day, nothing like the three of these last 4 days. Even if you included Monday was also a pretty good range because we started to the downside and had a pretty big turnaround and moved back up to the upside. The range itself has not been quite as great. It's still been pretty big, especially on Friday, but yesterday and today, not quite as big a range on the NASDAQ as on the Dow Jones Industrial Average, except for last Friday, but just kind of wild. And this is I'm going to give you my theory on what's going on and what's causing these big intraday swings, these big moves from the upside to the downside in a single day. And right now, by the way, with about an hour and 20 minutes left in trading, the Dow's only up 15 points. It has gone negative today. The Dow has been in negative right there. You can see that, and it actually went down. I think it was down 120, 130 points at one time, back up to just barely being positive. I mean, that's just barely 15 points in the green. But at one point in time today, it was up a couple hundred points. So again, a big swing from the very top to the very bottom of where it's been. And who knows what an hour and a half could bring. You could see the Dow trading back up above its intraday high, and you could see the Dow 200 points below the lowest point it's been today, and neither one would surprise me in any way. I wouldn't be shocked with either one of those scenarios playing out. I don't think, I kind of hope I'm wrong, I don't think it's just going to flatten out like this and stay in this neighborhood of 15 to 30 points up on the day. I kind of don't get a sense that that's going to happen. I think things are just a little too wonky right now, if I can use such a word. So here's my theory on what's going on. I imagine a tug of war with, if you've ever seen a tug of war, you get 5 to 10 to 20 people on either side of a rope, and you've got the middle line. So you've got the big rope going out this way and out this way, and you got all your people over here, 10, 15, 20 people over here, and 10, 15, 20 people over here. And you've got the middle mark of the rope, and then this team on the left has to be able to pull it past this marker right here, and this team on the right has to be able to pull it past this marker right here. And it's like this team on the right gets it all the way over here, and then they've used up all their strength, and suddenly this team gets some strength and they pull it all the way back over here, and they can't quite get it over the line, and then this team on the right gets their strength back and they get it, and it's like this. And here's the reason I use this analogy. Here's what I think these two teams represent. Over here, I think you've got people who are the glass half full people. They look and they say, yeah, we got some challenges right now. We've got these issues going on with China. We've got the government shutdown. We've got some things that we don't really love, that we don't really like going on. But the glass is half full in their minds because they see this barrage of good earnings. JP Morgan, Goldman, Bank of America, Morgan Stanley, all great earnings reports just in the last 48 hours. There's now, those are all in one sector, those are all bank stocks, but there's optimism that other companies that are going to report towards the end of this week and into next week are going to be reporting similar things. There's this optimism about, in spite of some of these negatives, we see more broadly good things going on in the economy, and we like what the administration is doing. We like what we see happening overall, and they're excited about it. And over here, you have exactly the polar opposite. They say, this group over here is saying, well, in spite of these really good earnings, in spite of the probability of 2 more rate cuts coming before the end of the year, in spite of wages going up, even though employment numbers are struggling a little bit, in spite of those things that are maybe net positives for the economy, we are so doom and gloom. It's about to crash. It's about to implode. World War III is coming. The markets are going to crash. The world economy is going to go under. China is going to, everything we do is so linked to China that if they say boo, we should be running and cowering. And they can't get out of their own way in terms of the pessimism. So, you've got a glass here that represents the overall economy, and it's exactly halfway full, or it's exactly halfway empty. And you've got these two competing sides. And on these sides, you've got some big brokers and some big hedge fund managers over here, but you've also got some over here, and you've got some retail day traders over here, and you've got some retail day traders over here. And you've got people that are generally kind of grouped together, but on opposite polar sides of whether they see the glass half empty or the glass half full. And I think until you get something that sort of gets these people over here to see that the glass is halfway full, or something that gets these people to consider that maybe the glass is half empty, you end up with this incredible volatility and these massive swings intraday. I mean, the market's starting up in a very, very positive way and then finishing really low, or vice versa. The market's starting way down and then big, huge intraday swing, and it finishes way to the upside. So you've got these two competing ways of looking at the same data and the same thing, and that's what's causing these great big swings. It's going to take something like I want to use the term rock solid, but with when you're dealing with China and trade deals, you got to think back to the Reagan era of trust but verify. You want to give them the benefit of the doubt when they say they'll do certain things, but then you've got to all the time, you have to constantly, without fail, you have to watch them and verify and hold their feet to the fire. But it would take something like a deal getting signed with China. Something that, Trump had one of these deals in his first term where China agreed to buy, I don't know how many billions of dollars, or multi-billions of dollars worth of our soybeans, and now all of that looks like it's kind of blowing up. But a deal of that nature, I shouldn't say it looks like it's blowing up. It has blown up completely. But to put together a deal of that nature, now you're always going to have that part of you that says, yeah, but you can't trust the Chinese government to follow through and do what they say they're going to do and what they claim they're going to do. Okay, that aside, you still got to get a deal in place. You've got to get the government open back up so that the people that are the glass half empty people don't look at that anymore and say, the government's never going to open. It's all doom and gloom, and the sky is falling, the Chicken Little thing. Or you're going to have it go the other way. You're going to have the people that right now think the glass is half full have got to see something that would convince them otherwise. You've got to maybe have Jerome Powell shock everybody and not do a rate cut when they meet at the end of this month. You'd have to have a situation where the China-American trade war escalates to a level where maybe it's not repairable. Maybe we get to a spot where we can't come back from it, or it really does have a dramatic negative impact on our economy and on our markets. You might have to get a situation where something in the government breaks and can't be fixed. You get a situation where Democrats decide that they would rather have the government shut down indefinitely, and you get another full month or more of no compromise and no give or take on the part of one political party to the other. You know my opinion. I feel like the Republicans better stand fast and not give 1/100th of an inch on this situation. It is the Democrats that are being completely hypocritical after all the times they've said you can't shut down the government. They're the ones voting to keep it shut down. So that's my opinion, but I'm very firm on that opinion. So if they just don't ever flinch, and I pray the Republican Party doesn't flinch, maybe you go into 2 full months of government shutdown, 3 full months of government shutdown. Now, that could be a really prolonged period of time where you're getting these big dramatic swings, and you might not get these kind of swings every single day, but if you have the swings that are like this little period of time we spent back here, those are rough. Those are rough periods to trade in. You get a month or two that looks like that, and that can be rough. It doesn't have to be these huge intraday swings. It could be the Dow giving up 1,000 points over an entire week and then getting back that 1,000 points over the next week, and then giving up 1,500 points the week after that and getting 12 of it back the week after that. So that volatility, I believe, is going to be there. It's going to remain there until one side or the other becomes somewhat convinced that they can look at it different, that they can shift and say, okay, now I see that maybe the glass is half full instead of half empty, or look, I'm coming around to the fact that this is a half empty glass and might get worse than that in real short order. And so, until you get one of those two scenarios, I think this volatility continues, and I think we continue to have a tricky situation. All right, what does that all mean for our trades? I'm going to start on the side of the triple play trades. If you look at my chart right here, my spreadsheet that I keep track of all these in, this looks bad. This is down a lot, down. With the exception of Strategy Inc., I believe these other 5 open trades are all going to end up profitable. I'm not worried about Nike because we're much farther out in time. JP Morgan is going to be tricky. Tomorrow, we are probably going to have to choose the side that we want to stay with on this trade, and we're probably going to have to roll one side out. JP Morgan, it's setting at 307.50 right now. It's got to move down to 305. It could do that pretty easily. It's only $2.50, or it's got to move up to 315, which is $8. It's up $5.50 today, and it's been up as much as $8 a share today. I am leaning strong on JP Morgan towards it probably moves up towards 315, even if it does so slowly. So probably tomorrow we're going to roll that 305 put, 305 short put. If we get some upward movement tomorrow to piggyback onto what's happening today, maybe we roll it up to 310 and let that expire, and then take the call side of the trade, the 312 long call, the 315 short call, and roll it out 1 week in time. And a combination of doing those two things probably maintains an equilibrium on our cost basis overall. And I think by the end of next week, we're profitable in the trade. So even though it looks bad right now, I think we end up profitable in this trade. I'm sorry, I was talking about JP Morgan and Nike. I'm not worried about. Move down to Texas Instrument. That expires the end of next week. I'm not worried about that. They're having a big, huge move today. I think they'll continue on that move, and we may get out of that one before the earnings report happens. Johnson & Johnson has been up today and it's been down today, but it only needs to go up about another $1 to guarantee us profit. It's got tomorrow and Friday to do it. Possible we'll have to roll the call side of that out, but I think it's more likely that Johnson & Johnson goes to the upside and gets above our 192.50 short call strike price, and we'll be in good shape. Texas Instrument, we just like with Taiwan Semiconductors, we go out to expiration at the end of next week, and they're yet to report their earnings. And I think once they report, they're going to skyrocket up or they're going to drop dramatically and collapse down. So this looks a little bit ugly right now. We sent out an adjustment on MicroStrategies. We rolled it out a week and we reversed the order. We had our short call here, our long call here. We basically reversed those and went the other way with them. So now we're in a bear call spread. We only took in about a 60-cent per share credit. As we get into the early part of next week, we'll probably move both legs of the trade straight down unless we start to see a rebound to the upside, and then we'll address that if we need to. So I think we can end up in a much better position than we're in right now with Strategy Inc., but we've already adjusted that one for today, and we'll work on it moving forward. On the spread trade side of things, NVIDIA is rebounding a little bit today. Are they still up? Yeah, they're only up 25 cents, but they're up a little bit today. Palantir was up earlier today. They've been down for a little while, but they're only 80 cents down. And our DIA trade, not much change today because the Dow is still what I would call, even though it's moved up a little bit from the time I started this presentation, it's still only 0.1% up, but that's building on top of yesterday. So that trade is improving, even though it's not still great looking in that sense. And then our Apple trade right now is pretty neutral. I think it's pretty flat. I show a 0.5% change here. This probably needs to refresh, because on my live trading screen where things are open and moving, I show that overall I'm down about 1% on the Apple trade. Not worried about it because it's, we got a lot of time on that one. So overall, I think we're not in as bad a shape as maybe what it looks like on the surface right now. And I'm optimistic that a lot of what we have open, especially on that triple play side, is going to get profitable. I think when we're ready to close these trades out, we're going to do so with profit on maybe all of them except for Strategy Inc. And we'll keep working on that one. We'll keep the focus on that one and see what we can do to either whittle down the loss dramatically, if not eliminate that loss completely if we get an opportunity to do so. So looking good. Caller trade side of things, Bank of America reported today they're having a really nice move up. We've got 55 strike short calls that are now in the money, but they're quite a ways out in time. Our 48 strike short puts will expire on Friday. They're worth almost nothing already. And our long puts, we've got them out in November, and obviously they've lost value, but that's because the share value has gone up really nicely. We're looking good on that trade. Everything else, I reviewed everything else we have open today, and we're set to go through earnings on everything we have open on the caller side. So all in all, I'm incredibly pleased with where our portfolio's at for the year. A little bit frustrated with the rockiness we've had on the triple play trades over the last month and a half or 2 months, but we're still up over 100% return if you followed every single trade we've done on the triple play side of things. And I think we'll end the year closer to 150 because we're at 103, 104%, 104%, I think, 103%, but in part because of 5 open trades we have that are all negative right now. If each one of those 5 trades just got back to break even, just for fun, I'm going to do this really quickly. I'll reverse this in a second. I'm just going to delete each one of these. If we got each of these 5 trades back to break even or got some of them profitable, we're setting at 152% on the year. Now, it's good. I would say 125% because, like I said, the MicroStrategy one going to be tough to do, but we're still get it whittled down a lot from the loss we have right now, and overall be in great shape. So we'll see what happens. A little bit of trading left today. Just barely over an hour for things to still trade. It's bounced a little bit since I started this presentation, since I started recording this, but there's still an hour to trade. Anything could happen. We'll see. We'll see what happens. So I'm going to wrap it up right there. Have a great rest of your Wednesday. I'll be back on tomorrow to record an update on what's going on Thursday. Thanks, everyone. Bye-bye.